The foreign exchange, Forex Market, is the place where traders from all over the globe come together to conduct currency transactions. In 2019, its daily trading volume was $6.6 trillion, making it the biggest financial market in the world. It is open for business around the clock, 5 days a week.
Trading in Forex Market, as a result, might seem to be an intimidating concept, and it can be challenging to know where to get started, which is why we have put up this guide to Forex trading in 2022, along with 10 essential pointers for beginners.
Even though we focus most of our attentions on the foreign exchange market, the trading tips below can also be applied to other financial markets, such as stocks and commodities. Here are 10 Forex trading tips to help you master the market.
One, acquire your own knowledge. Spending time studying about Forex markets and how to trade them is essential if you want to be a successful Forex trader. Make sure you completely educate yourself on the art of trading. It is true that studying requires both time and work, but there is no question that it will be beneficial to your trade. Additionally, learning never ends. There's always more that can be learned, regardless of how much experience you have as a trader. Continue to stay up with current events by reading the news and researching the patterns in the market. And don't let yourself forget the fundamentals.
Number 2, create a trading plan. Many Forex traders are guilty of jumping into trading too quickly without having a clear strategy in place beforehand. It is a well-known adage that when you fail to plan, you plan to fail. And the concept applies just as well to Forex trading. Your Forex trading strategy may be thought of as a collection of guidelines that you will use to execute your trades. You will be more likely to follow these guidelines when you begin trading if you define them beforehand and record them in writing. When you are developing your strategy, it is important to ask yourself the following questions. What are your objectives in trading? What kind of trading do you do? How much of your day will be spent trading? How will you decide when you enter and leave the market? How much are you willing to risk? How much are you willing to risk? Overtrading, which may lead to a loss of focus and impulsive trades, can be avoided with the aid of a well-thought-out trading plan. Set a daily or weekly limit on the number of trades you will undertake as you create your trading plan.
Number 3. Find yourself the best broker. Choose your Forex broker carefully. Don't just go with the first one you find online. Make sure to set aside some time to explore the various brokers, read reviews of them, and make sure to choose the broker that is most suitable for both your trading style and your preferences. When selecting a broker, the following are some crucial considerations to keep in mind. A wide variety of trading instruments, comparable spreads, a solid, trustworthy trading platform, leverage availability, safety of the client's funds, excellent client service, educational tools and materials. In addition to these and other considerations, it is of the utmost importance to make certain that the broker you choose is authorized and controlled by an authority that is acknowledged on a global scale.
Number 4, start gradually. Trading is like acquiring any other new skill, in that you have to start with the fundamentals before moving on. Don't be tempted to start with big money trades right away. Instead, start with low position sizes and gradually increase them by taking your time. Learn progressively from each step that you take, and avoid increasing the size of your position until you feel like you can do so comfortably. Keep in mind that this is not a competition of any kind.
Number 5. Get used to making mistakes. Accepting that you'll be incorrect on occasions, especially in the beginning, is essential for a successful trading career. Even the most successful traders make errors and lose money from time to time. The sooner you realize that being incorrect and making errors are inevitable results of learning to trade, the better. If your most recent trade resulted in a loss, you should make every effort not to dwell on it and avoid allowing it to cloud your judgment when it comes to making decisions on future trades. Analyze your mistakes instead, then make an effort to grow from it.
Number 6, maintain a trading journal. Maintaining a trade journal is a great practice for every trader, whether they are just starting out or an experienced trader looking to improve their methods. A reliable trading journal will record information on each and every trade you make, regardless of whether the trade was profitable for you. You may get insight into both what you did well and, more crucially, where you fell short if you make it a habit to schedule time on a regular basis to review your past trades. Being able to analyze both your wins and losses will help you learn and progress as a trader.
Number 7. Manage your emotions. When you are trading, it is essential to maintain control of your emotions, especially your levels of stress. Make sure you are not making any rash choices out of emotions, but instead are basing your decision on solid information. Find out what's causing your stress and work on eliminating it or lessening its effect on you as a way to lower your overall stress levels. This is something that is much easier to say than it is to put into practice, particularly after a run of losses, but it is something that may prove to be the deciding factor in whether or not a trader is successful.
Number 8. Focus on risk management. Good risk management is a critical component of being a successful Forex trader. Risk management is the process of understanding the risk associated with Forex trading and taking effort to restrict your exposure to these risks. The two most important pieces of advice for beginner Forex traders are: never risk more than a small percentage of your capital on a single trade, and always trade with a stop loss in place. A stop loss is a trading tool that lets you tell your broker to close a trade automatically when the price reaches a level you choose. By implementing a well-placed stop loss, traders may minimize the danger of losing all your capital on a bad trade.
Number 9. It's important to take breaks. Remember to step away from your trading terminal every once in a while in order to give yourself a mental break, since this is an important Forex trading tip that you should follow every day. When you are engaged in a lengthy trading session that requires your attention and energy, this is of utmost importance. It is beneficial to take a break and step away from the computer when this occurs. Allow yourself some time to gather your thoughts before continuing. When you go back to your desk, you will find out that you are less anxious and better able to concentrate on what you're doing.
Now, before we share the final tip for beginner traders, do ensure you like, follow, and subscribe to this YouTube channel if you find this video educative. Number 10. Have patience. A common misconception among those who are just starting out in trading is that they will become wealthy within a few short days. The path to become a great Forex trader needs not only a significant amount of work, but also a significant amount of time. This is the truth. Trading successfully is not something that can be accomplished in a matter of days or even weeks. Thus, take your time and enjoy the ride rather than trying to hasten the process.
Always keep in mind that being successful in Forex trading requires a combination of preparation and obstinacy, in addition to the continual application of discipline in order to see results. The rest is up to you, but these Forex preparation ideas will assist.
Practice is the single most important factor in the success of even the most successful traders. You will only have a shot at generating profitable outcome if you keep practicing your trading strategy over and over again.